Welcome to the Wealthy Life Podcast. Today we're going to talk about how to find the best credit card in Canada. We're going to cover costs, benefits, and so much more. And joining me today is Cory Santos, a seasoned financial writer and credit card expert whose work has been featured in publications across North America. Cory, welcome to the show.
Hi, Sybil. It's great to be here. Looking forward to it.
So let's jump in. What is a credit card and why should people have one?
Yeah, at its most basic, a credit card is a type of payment card that you can use to make a purchase at pretty much any merchant around the world. A credit card looks a lot like a debit card. It acts in similar ways to a debit card, but they're extremely different. A debit card is attached to a checking account. So when you make a purchase, it debits out of your account. On the other hand, a credit card is what's known as revolving credit. So you can make a purchase and then you won't have to pay that purchase back until the end of the month. And even then, you'll only have to make a small payment towards that. So a credit card is an extremely useful payment tool that offers a lot of consumer protections in the event of fraud. And they're useful for pretty much everything from financing a purchase to paying off debt to planning a vacation to just ensuring that your credit score is in good health so you can build up your credit and work your way into a mortgage or something like that.
Well, you know, the credit building is an important feature, but not everybody should have a credit card, maybe. What are some of the reasons people should steer clear of credit cards?
The biggest concern with credit cards is the debt. Having to only pay back a small amount, usually the minimum payments around $40 or so every month, can be a red flag to a bull, let's say, for someone who's kind of more prone towards spending. And if you do that, you can rack up a lot of debt really quickly, which can significantly impact your finances and your credit health in the future.
Right. So getting a credit card can build your credit, but it can also destroy your credit if not used wisely. And I know the type of people who use credit cards irresponsibly. And what I mean by that is just buying things they want, not necessarily need. They don't have to have it. They rack up more debt than they should have and then can't pay it off in full every month. And then end up paying just tons and tons of money in interest charges, which is never a good thing to do. But today, it seems like everybody almost has to have a credit card. If you try booking a hotel, good luck getting a hotel room without a credit card, or renting a car, or booking flights or tickets online. So I think it's a good thing. Let's talk about how the credit card works. When do you have to pay, and how can you avoid interest? Because I'm a big believer, don't pay any interest on your credit card.
Absolutely. When you make purchases on your credit card, they are obviously ledgered to your account. When the account closes, there's something called a grace period. You have a 21-day grace period in which to pay off that interest. One of the benefits of a credit card is if you make those payments before the grace period, you will not be charged any interest. So the best way to maximize your credit card rewards and to avoid having that interest charge at the end of the month is essentially to pay your bill early, and then you won't have to pay any interest.
Yeah, and it's a good habit to get into. I pay my credit card off in full every month by the due date, and I have it set up on auto pay. So it doesn't matter what my total is, that amount comes out of my bank account automatically in full every month. And an extra little tip for people is if they're worried that they don't have enough money in their bank account to pay their credit card, maybe they've got a line of credit or a little bit of an overdraft on their bank account, so there won't be any issues paying that credit card bill off. The reason that's important is because interest rates are so high. What is the average interest rate on a credit card, Cory?
It continues to climb. A general rule of thumb would be about 21.99% right about now.
Yikes, 22%. Nobody wants to pay that. Now, I understand that sometimes people are in tough situations and they need credit for emergency purchases, and these things happen. I think the secret in that case is just focus on trying to pay it off as soon as you can. But if you don't have to use the credit card for those purchases in the first place, then that's great.
Another great tip would be to break down credit card repayments into multiples. Set up a direct deposit so that you're paying maybe the bill twice, maybe every other week. That way you're paying a little bit more, but it's a little bit less at the same time. You're basically paying off your bill, but it's coming out from one paycheck from another paycheck. So You're kind of spreading out your costs.
Yeah, that's a good tip there. I know my son and I were having this conversation the other day because he's got his first credit card, he's building some credit, and he really doesn't want to pay anything in interest. So he's looking at his bill, and the grace period is throwing him off. So let's just say his statement date or his billing date is the end of the month. Well, he put $1,000 of charges in a month. He's got the money to pay for it, so he makes the payment. Or he has it set up to pay on the due date, which isn't until 3 weeks, 21 days into the following month. So that following month, he maybe charges another $500. So when he's looking at his statement, it says he owes $1,500, but really he only has to pay $1,000. So he's like, Mom, they only took $1,000 out, but I owed $1,500. I don't want to pay any interest. Are they charging me interest? It's like, no, because the $1,000 was all that was due at the end of that first month. And then the $500, that will show up on your next bill. So it was really good for him to learn that. I think back in the day when people used to spend cash, you never overspent because you either had the cash or you didn't have the cash. Do you have any tips for viewers on how to treat the credit card more similar to cash?
The easiest way to treat a credit card is to treat it like your debit card. If you are afraid that you might overspend, if you're afraid that you're going to have a huge bill at the end of the month, only spend what you have in your checking account. So if you go make a purchase for $100 with your CIBC credit card, that same day, use your checking account to pay off that $100 balance.
That's great.
If you only spend what you have, you're not going to overspend. That's the best way to look at it.
Okay, so let's assume everybody is using their credit card wisely. How do they find the best credit card for them? What are the things they need to look at before deciding?
That really depends on the person, their spending habits, and what they're looking for in a credit card. I like to break it down into 3 things. You look at the rewards, you look at the rates, and then you look at the rest.
Oh, I
so
like
you
that.
want to look at, thank you. So you want to look at things like your welcome bonuses, your earn rates on everyday things like groceries or things like travel. You want to look at the interest rates for your card. If you plan to carry a balance, does it offer any promotional APR on purchases or balance transfers if you're carrying existing debt? And then once you get into the rewards and stuff, you want to look at where exactly are you spending your money? Where exactly do you see yourself using your points? Things like that.
Yeah, that's really, really important. You've covered a lot there. So let's say the type of person who maybe uses it because they've got some emergency expenses that they have to use their credit card for because they don't have any other choice. I would think a low interest rate card would be the best option for them in that case versus somebody, no? I'd like to hear
It really depends on what you're looking for. One of the problems with the lower interest rate credit cards in Canada is they tend to charge an annual fee. So if you're looking for something that you just want a low rate, you would have to kind of marry that with the idea that you might be paying an annual fee between $20 and $40 every year, as opposed to if you just got a basic rewards card like a PC MasterCard or something like that, which charges no annual fee. It might have a slightly higher interest rate, maybe by about 5% or so, but you're still not paying that annual fee. So again, it really comes down to what you're looking for in a credit card.
Right, and I think some math would need to be done in that case. So depending on the amount that you're going to carry on your credit card, calculate out what the interest charges would be versus what an annual fee would be on a lower rate. What about the person who likes to travel? What's the best credit card for travelers?
I'm going to give you a cop-out answer again and say it depends. That's because it depends on what your travel preferences are. Let's say you're just an occasional traveler. You're not married to a particular airline. You fly once a year. you're not really going to be interested in unlimited lounge access. You're not going to really care about if you're getting Air Canada points if you're not flying Air Canada. What if you're flying Porter? So in those instances, a more bank-oriented card, such as like the Cobalt card, is one of the best cards for pretty much anything. The American Express Cobalt, or even the American Express Gold rewards. Those are kind of more robust, generalized rewards cards. If you're, say, not a TD, an Aeroplan fanatic, you love Air Canada, and you fly, let's say, 3 or 4 times a year, a card like the TD Aeroplan Visa Infinite Privilege, which carries a very steep several $100 annual fee, makes a lot more sense because it comes with a welcome bonus, which is valued, I think, about $2,400 in Aeroplan points. It comes with lounge access. It comes with free bags for you and 9 other people on your itinerary, priority boarding. It's a great
car
card.
Insurance,
comprehensive medical
out-of-country
insurance,
medical.
travel insurance.
Right. So
Absolutely.
if you are an avid traveler, all of those extra little benefits really add up. So what I hear you saying is make sure that the credit card that you choose has all those extra perks if you're going to use it. If you're going to travel and, fly Air Canada, then maybe the TD Infinite Aeroplan card. If you're not going to use Air Canada, you might use Porter, you might use WestJet, you're flipping back and forth between airlines, then maybe just a more general travel rewards card would be better.
Yes, exactly. And you have to think about the annual fees as well. If you're not traveling that often, you don't want to pay a $499 annual fee.
Right. Now, how about the cashback? Do those make sense, and are they better than a travel rewards card?
I love cashback cards. I think they make more sense for the everyday Canadian simply because cashback people tend to redeem towards the things that they would normally redeem towards, which is statement credits, discounts in store, merchandise and gift cards and stuff like that. Cashback is very, very straightforward. Many cashback cards are either no annual fee or low annual fee. And even if you get into the very premium cashback cards, the annual fee there tends to not go over about $120, and you still get robust rewards and all that great insurance that you would typically find with a travel insurance card. So I think a cashback card makes a lot of sense for most Canadians.
Yeah, and you can spend the cash however you want. Now, what about points to use for merchandise like cameras, blenders, wine glasses? Are those worth looking at?
That's one of the strange things you always see on those credit card landing pages. You always wonder who's actually redeeming these things for lenders and stuff like that. In general, when you get towards the gift card and the merchandise redemptions, those tend to be the lowest value, typically because you have to go through a merchandise portal, whether it be RBC or Aventura or something like that. So you tend to get maybe about 50 cents on the dollar for the point. Whereas if you were booking for travel, you might get above $1 or $1 a point, something like that.
Right. And I think with some of the specific travel rewards cards, like I know myself, I do fly with Air Canada a fair amount. So the TD Aeroplan Infinite Visa makes a lot of sense for me. It is a higher price point, but I get the equivalent to about three times the benefit of cash. So if I spend $100 on a cashback card, I'm going to get $1 back if it's based on a 1%. But if I use the Aeroplan card, I get $3. So it's
no, that's absolutely true. The one caveat with that is when you're booking for travel, it is a little bit hit and miss. You're never actually going to get the same redemption value every single time, just from the value of the points and the flights changing and things like that. So one of the benefits of cashback is always going to be cashback. You'll probably get about 75 cents to the dollar for your points. And you avoid that confusion of having to find the best value of whether or not you're transferring points to Delta Airlines or Singapore Air or something like that to find better value.
Right. And is there blackout periods for some of the credit cards that offer travel rewards?
There are. I don't know them off the top of my head. Generally, when you're booking through a loyalty program like Aeroplan that will not be that. If you book through Amex Travel and stuff like that, there won't be. So if there were going to be blackout dates, it would probably be with kind of more broad programs like Air Miles. But then again, don't quote me on that because I don't want to be sued by Air Miles.
Yeah. Okay, so what I hear in summary is everybody should have a credit card to start building credit, but use it responsibly and wisely. Pay it off in full every month to the best of your ability. And then when finding the right credit card, the perfect credit card for you, you need to ask yourself a few things. You need to figure out how much do you spend a year? So how much benefits are you going to get from it in the first place? Because if you don't use the credit card, you don't want to buy one that has an annual fee that you're never going to get the benefits from. But aside from that is, do you want to carry a balance? Then interest rate may be important. Are you an avid traveler? Then look at the different travel rewards cards that are out there. And if you're not an avid traveler, you're just a periodic traveler, then consider the cashback, because the cash can be used to spend on whatever you want. Now that people maybe have got an idea of which credit card is going to be best for them, what about carrying more than one credit card? Is that a good idea, a bad idea?
Carrying multiple credit cards is a great idea if you use them correctly. The benefit of having multiple credit cards is that you can earn rewards in categories that another card might not earn rewards in. This is a great place to kind of merge the idea of cashback with, say, like an Aeroplan or a VI Porter credit card, because then you're filling in those gaps. You have your everyday rewards and you have your travel rewards, and it's a nice ecosystem for the user.
Right, so you can pick and choose when to use what card to maximize the benefits that you're going to receive. What about Visa versus MasterCard versus American Express? Is one better than the other?
In terms of Visa and MasterCard, there really is no difference. Visa, I think they argue that they're accepted in 208 countries and MasterCard's accepted in 212 countries or something like that. So there's absolutely no difference. With American Express, the differences that we used to see in the past, namely that a lot of places don't accept American Express, that started to vanish. And now I would say if it's not 100%, it's easily 99% of all merchants across North America take Amex. The big reason there was Amex previously had a much higher merchant cost, the cost of the merchant actually accepting the American Express card. But to counteract that, they now negotiate those rates with individual merchants. So that's what's brought that down. So you shouldn't really have any problems in America, most of Asia and Europe with American Express now.
I think it's important to expand on that a little bit, how credit card companies make money. I remember when my husband and I were first living together and we were ready to buy our first home and we applied for a mortgage, and my credit was great and my husband's was just so-so. I'm like, what's going on with your credit? Well, it turns out he had a credit card and he thought the only way credit card companies made money was charging interest. And so it was a good thing if you paid them a bit of interest, it didn't matter. So rather than paying even his minimum balance by the due date, he would just wait till his payday and then pay the whole thing off in full. That's a no-go. You have to pay the minimum or it's going to go back, it'll negatively impact your credit rating. So that was really interesting to learn. Any other thoughts that you think people should be aware of, Cory?
Yeah, I mean, the credit card companies themselves, the issuers, the banks, they make their money off that interest, the annual fees and stuff like that. But the actual payment networks, they make their money off the merchant fees. So when you go in and make a purchase, let's say it's a $100 purchase, I believe American Express used to charge, I want to say it was about 1.8%, or maybe that is what it is now. So if you make a $100 purchase, $1.18 of that is going to the payment network, whether that's Amex, MasterCard, or Visa.
Right.
So that's how they make their money.
And I know some of the smaller vendors don't have great deals. So the type of deal a Costco might have with MasterCard will be very different than the little corner store has with the credit card company. So
yeah. And that's why you see the minimum $5 spend or minimum $10 spend for a credit card and stuff like that in shops.
Now, I'm also starting to see some vendors are charging an extra fee if you pay by credit card. Are they allowed to do that?
It's legal, yes. It's something that's been going on forever. Typically, yeah, it's about 50 cents or 25 cents. Again, it's just a way to recoup the merchant fees.
Yeah, and I think in those cases, if you're going to use your credit card at a merchant that does charge you a surcharge of 2, 3, or 5%, because I've seen that. It's not very often, but it's starting to pop up. Then you've got to think, well, wait a minute, maybe I'll use my debit card instead, because it doesn't make sense to pay a 5% extra fee for whatever it is you're purchasing if your reward benefit on a cashback is only 1%, for example. Would you agree with that?
Oh, absolutely. And I think that's one of the areas where we'll see a lot of growth in debit cards in the next 5 to 10 years in Canada. In the United States, there's been a real push towards a subset of rewards debit cards, essentially acting in much the way that a credit card would, except taking out the credit aspect. And I think I could see that eventually moving into the Canadian market with some serious gusto.
Yeah, it's something to keep an eye on for sure. Cory, is there any other final comments you want to share with our audience today?
Just make sure you're using your credit card responsibly. If you're looking for a new credit card, make sure you take the time to sit down and really consider what you're looking for, not just from what rewards you want to earn or what magical destination you want to go to, but how often do you plan to pay down the balance? Are you planning on paying off some existing debts? Do you want to pay an annual fee? A lot of times you'll get a card with a great welcome offer of $200 or something like that, but it charges an annual fee. The next year, you're not going to have that welcome bonus. So you need to see what the long-term value of that card is before you apply. So essentially just use your brain and check with the experts and you should be okay.
That's great. And Cory, where can people go if they want to read some of the articles you've written on this?
I've been published extensively in Canada. You can find my work at lowestrates.ca, Credit Card Genius, money.ca, and in the US with Best Cards and MoneyWise.
Cory, thanks so much for being with us today. This has been great.
It was so much fun.
And for our audience out there, we'd love to hear from you. What are some of the topics you want to hear next? Reach out to us at thewealthylife.com. As always, please seek independent professional advice before taking action. We are here to provide information to help you learn and ask the right questions to make smart decisions so you can live the wealthy life.